Everyone thinks a bank's primary job is to safeguard money. They're catastrophically wrong. Sometimes a financial institution becomes something else entirely, a meticulously constructed facade for fraud, money laundering, and even the funding of global terror. This is the story of BCCI, the Bank of Credit and Commerce International, a name once whispered with reverence, then with pure dread. Founded in 1972 by Agha Hassan Abedi, a Pakistani financier with grand ambitions, BCCI quickly expanded its global footprint. It promised a new kind of banking, tailored for the developing world, operating across continents where traditional Western banks often hesitated. By the 1980s, it boasted branches in 78 countries, a true financial empire. But beneath the veneer of respectability, BCCI was a bank built on secrecy and deception. Its complex corporate structure, a web of offshore subsidiaries and shell companies, was designed to evade regulatory oversight. It was a perfect playground for those who sought to move illicit funds without scrutiny. Early warnings were dismissed. Regulators in various countries caught glimpses of irregularities, but BCCI political connections and seemingly legitimate growth often stifled deeper investigations. The bank cultivated powerful friends, making it seem untouchable. The bank's illicit activities weren't limited to simple fraud. It became a global clearinghouse for drug cartels, intelligence agencies, and corrupt regimes. BCCI laundered billions for figures like Manuel Noriega, the Panamanian dictator, and even facilitated arms deals. The American authorities, specifically the U.S. Customs Service, began to build a case. Operation Sea Chase, launched in 1986, focused on BCCI's role in laundering drug money for the Medellin cartel. Undercover agents infiltrated the bank's operations, collecting damning evidence. In 1988, a major breakthrough occurred: the arrest of several BCCI officers in Florida. This wasn't just a localized bust. It was the first tangible crack in BCCI's impenetrable facade, revealing the systemic nature of its criminality. Yet the true scale of the scandal remained largely hidden. The U.S. government's investigation, led by figures like Senator John Kerry, would eventually uncover connections that shocked the world, reaching into the highest echelons of global power. The Bank of England, too, was conducting its own secret investigation. In 1990, Price Waterhouse, commissioned by the BOE, delivered a devastating report. It detailed widespread fraud, massive losses, and a complete lack of financial controls. This report, initially suppressed, confirmed the worst fears. BCCI was a criminal enterprise masquerading as a bank. Its losses were astronomical, estimated in the billions, far exceeding its declared assets. On July 5, 1991, regulators in multiple countries, acting in concert, moved to seize BCCI assets and shut it down. It was an unprecedented global operation, reflecting the bank's vast international reach and the coordinated effort required to dismantle it. The aftermath was chaotic. Depositors, many in developing countries, lost their life savings. Investors saw their fortunes vanish. The collapse sent shockwaves through the global financial system, raising serious questions about regulatory oversight. What emerged from the investigations was a picture of a bank that systematically engaged in money laundering for drug traffickers, financed illegal arms deals, and was even linked to funding terrorist organizations. Its network was so entrenched, its operations so clandestine, that untangling it took years. The BCCI scandal became a cautionary tale, demonstrating how a powerful financial institution could be corrupted from within, exploiting regulatory loopholes and political connections to operate with impunity. It highlighted the critical need for stricter international financial regulations. Agha Hassan Abedi, the bank's founder, faced charges but was never extradited to the U.S., dying in Pakistan in 1995. Many of his top lieutenants were eventually convicted, but the full extent of the conspiracy and all those who benefited likely remains unknown. The The scandal forced a reckoning within the banking industry and among international regulators. New anti-money laundering laws were enacted, and greater emphasis was placed on transparency and accountability. Yet, the question lingers, could another BCCI emerge today? The Bank of Crooks and Criminals, as it was infamously dubbed, didn't just collapse, it imploded, leaving behind a crater of financial destruction and a legacy of mistrust. Its story serves as a stark reminder of the dark side of ambition and the profound vulnerability of our global financial systems. Explore the next untold story of corporate malfeasance and the minds behind it.